I'm Kurt Shimmers. Every day, fortunes are gained and lost in the financial markets. News, trends, and even geopolitical events shape your financial landscape. Join me and my expert guests right now on Traders Nation. Welcome. You are tuning in to Traders Nation. Thanks for making us a part of your day. Don and I have got a fantastic show. Kathy Fettke, she's back with us again today. She's co-CEO and co-founder of Real Wealth Network. We're going to be talking with her about the largest generation in American history, the Millennials, okay? Are they buying homes or are they opting out of that? We're going to be talking with her about that, getting the numbers straight here on Traders Nation. Plus, Don and I got a great stock list for you. Payment processors are back on our list and they're doing well. Gambling stocks, not so well, but it's been a while, so we're going to be catching up with that. So we got guests, stocks, and a whole lot more. Stay tuned right here to Traders Nation. We'll be right back.
Traders Nation. Get Pro Online DVD Trader today. Whether you're an experienced trader or just beginning, you'll improve your skills dramatically. Click on the Knowledge Center button to order your copy today. Traders Nation, delivering what you want when you want it. Traders Nation.
Hi, this is Willie Nelson. You're tuning in to Traders Nation.
Yeah. Welcome back. You are tuning in to Traders Nation. Hey, Don, real quickly, I want to take a mention here about Pro Online Trader DVD. Listen, when we talk about stocks here today, we talk about support and resistance and candlestick charts, all that good stuff. And some of it, if it sounds Greek to you, not getting it, get a copy of Pro Online Trader DVD over at tradersnation.com, $29.95 plus shipping and handling. Click on that More button, tradersnation.com in the top menu, and you can get your copy, right, Don? This is the way to go, folks. Okay, it really is. Get your copy today. Hey, Dono, let's talk about, we got what, payment processors here today. Gambling stocks are on our list. Certainly Visa right there at the top, right, Don? Your thoughts?
Yep. Well, we've been talking about these stocks now, for many months. These are the digital payment companies. What can you say about MasterCharge? $220 up here at or near that 52-week high.
Sure.
Visa, not too far behind at $148.
Yeah.
Square and PayPal holding tight, putting on nice performances, and then don't forget the Brazilian company that's much smaller firm, but very aggressive. PAGS, PAGS is back up at 28.74 while nobody was looking.
Yeah.
So the payment processors, the digital payment companies, they're rolling.
The money movers, right, Don? I mean,
that's right.
Nothing happens unless these money movers are in place, and certainly they are. Visa certainly is one of them. On the top of our list here today, trading at $148.37. 1.2 million shares exchanging hands on this bad boy. Don, look, bring your charts up on this, folks. Up a buck again since we spoke about it last. They had this nice reversal off that $143 mark. And if you look at your charts, you're going to see that it's poking its body, this candlestick body, above that resistance, which, by the way, is now its new support level. Okay, breaks through that resistance, creates a new support level. All right, we talk about that in Pro Online Trader DVD. Visa should be on your list here today, and the ticker symbol on that one is V. And then, Don, certainly you mentioned MasterCard. MA is the ticker on that one, currently trading, like you said, $220.19. 846,000 shares exchanging hands on that one, Don. Up again, a buck since we spoke about it last. It busted through that resistance at $217. Very nice here. Don, your thoughts on MasterCard?
Well, obviously the stock continues to be accumulated. I mean, these companies are the blockbusters of the trade.
Yeah.
It's not only MasterCard, but if you take a look at the charts on Square, PayPal, even PAGS now, strong charts. These companies have strong momentum, and we've been talking about these now for months.
Sure, absolutely. Hey, a nice little other tidbit for MasterCard. We got a dividend. We got a dividend coming up here on 10/5, about 3 weeks away, Don. It's going to pay 25 cents a share. Not too bad, right, Don? All right.
Not too bad if you're paying attention.
Yeah, that's right.
Pay attention.
That's right, MasterCard. MA is a ticker symbol. Hey, Don, how about PayPal? Your thoughts on that one? PYPL, Don.
Well, once again, PayPal, PYPL, what do we got? $90.25. This company, PayPal, is on the move. And once again, this is one that has just been emerging over the past couple of years. Another, obviously, digital payment company.
Sure.
But they do a lot more, and so does Square, SQ, which is bouncing up here at around $86. These companies also lend money to their clients as well.
Sure.
So they've... they're to be reckoned with. They're giving MasterCharge and Visa a run for the money, but it's strong momentum in all these stocks.
Yeah, absolutely. All right, so PayPal, let's get the numbers on that one. $90.20 a share right now, 1.6 million shares exchanging hands. Not bad, Don. Bring your charts up on this, folks. Trading above its 50-day moving average, and it's kissing that 21-day moving average here today. We're seeing some crossovers in my indicators also, MACDs, etc. Again, if you don't know what I'm talking about, get a copy of Pro Online Trader DVD, and you can check out all of it today. Bring your charts up on PayPal, PYPL. Hey, Don, you mentioned Square. Let's get some numbers on that one, okay? $86.46 where it's currently trading at right now. 3.9 million shares exchanging hands is pretty respectable, Don. It really is.
Well, beautiful chart on that.
Yeah, no doubt about that. Up $8 since we spoke about it last, but it's rolled over since, so it's trying to recover from that rollover, and we'll see if it settles at this base level here today at the $86 range. Okay, Don? Yeah.
Plenty of momentum that goes with these stocks right now.
Yeah, and when you see some of that too, folks, I mean, people are, when you get into these newer highs, okay, or loftier highs that some of these stocks are getting into, I mean, people are going to they're going to sell this stuff, man. That's what they're here for, right, Don? They're going to buy it low, they're going to sell it high, and then that's the name of the game. They want to take some profits off the table, okay? And so that's what we see some of this. We see some profit taking going on, certainly, and why not? That is the name of the game. That's the only way you're going to put bread on the table, man, is when you lock in some of those profits, and that's what some of these stocks are doing. So it doesn't necessarily mean anything. They roll over. If they do, let them settle out. Bring your charts up. Your charts are going to tell you when to get in, and they're also going to tell you when to get out. Pro Online Trader DVD is going to help you with that if you don't know. Okay,
that's right.
That's right. Hey, Don,
give you the upward momentum.
Yeah, without a doubt. And you're not always gonna buy it at the bottom. You're not always gonna sell it at the top. There's that sweet spot that's in between there. As long as you're steady on that and you know what your charts are telling you to do, not your gut. Your gut is gas. Charts tell you the real thing, and so that's what you want to follow. Okay. Gaming, WYNN, WYNN is the ticker symbol on that one, right? WYNN Resorts. We haven't talked about gaming in so long, and I think it's really important that we at least do an update show on gaming here today, Don. WYNN, currently trading at $137. That's right. 750,000 shares exchanging hands here today. Don, your thoughts?
Well, WYNN is one of the strongest, if not the strongest company in the gaming trade.
Yeah.
And once again, negative news, hit this stock. And the earnings weren't as strong and robust as the street wanted. So the stock took a terrible pounding.
Yeah.
It dropped down to, I guess, around $27.
Yeah.
And now here we are back at $137.
Right.
And just yesterday there was a lawsuit announced up in Massachusetts by the guys who didn't get the deal in Massachusetts. WYNN got the award up there, and they're still continuing to build that out. But in any event, I wouldn't worry too much about WYNN. This is stock you gotta hang in for the long term.
Yeah.
It's a Macau-based play because Macau is where all the gaming money is these days.
Sure.
Of course, Las Vegas is strong. Atlantic City's on the comeback trail, but certainly WYNN, and then we have Las Vegas Sands.
Yeah.
Which is the other big player in the trade, trading in there at around $61. Mm-hmm. And there's a few others, MGM, to be reckoning with.
Yeah.
And we've got, don't forget, El Dorado Resorts is one that we talked about a couple of weeks back. That's another one. ERI is the symbol on that one, El Dorado Resorts. Got to keep an eye on that.
Nice. So nice lineup of stocks here. So let's talk about WYNN a little bit here. So you're right, Don. It dropped all the way down to its lows of $127 here recently. It's up from those lows, trading at $137. If you bring your charts up on WYNN, you'll see that it dropped all the way to $127, did a nice little retracement, rolled over again, made a higher base, and now it's back up to $137. Okay, so there you have it. That's WYNN, WYNN. Don, you also mentioned MGM. Let's talk about that. Currently trading at $28.32 here today. 1.3 million shares exchanging hands here today. Trading above its 21 move-in day average, which is nice, and it's reaching right there at its 50-day move-in average, folks. And you're going to find that right about $29 range, okay? It's actually trading pretty nicely after its dividend that it saw. You know, John, usually when a stock has a dividend, it will drop down that much of that dividend the next following day. Didn't really do that, even though the dividend, though, granted, wasn't that large. The dividend was only about 12 cents, but still, nonetheless, trading nicely after that dividend hit those X-payers, okay? MGM Resorts here today. MGM, Mary Golf Mary, is the phonics for that one. Okay, coming up next, we got Kathy Fettke. She's going to be with us. We're going to be talking about the millennials. Why aren't they buying homes? All right? Why aren't they buying homes? And is that going to affect us at all the other Generation X's, etc.? Stay tuned. We'll be right back with Kathy.
Hi, I'm Steve Forbes, and you're watching Traders Nation.
Welcome back. You are tuned in to Traders Nation. My pleasure to have back with us once again Kathy Fettke. She's co-CEO and co-founder of Real Wealth Network. Kathy, welcome back to Traders Nation. How are you today?
Thank you. I'm great.
Awesome. All right. So today's topic, Kathy, certainly is millennials. An interesting one indeed. Millennials, the largest generation in American history, right? In fact, a huge part of our future economy. But unlike everybody before them, they're opting out of home ownership. Why is that?
Well, I wouldn't say they as a group are opting out.
Yeah.
It's a really large group of people. Some are in their 20s and some are in their mid-30s. So, you know, those in their, you know, the older millennials are buying homes. It's just a little bit later than normal. It used to be about 31 years old was the average age that somebody would buy a home, and it was usually because they had a family, and that's changed. They went through the worst recession that we've had since the Great Depression, and it took them longer to get work. Just last year is when we started to really see unemployment dip. So they've been you know, getting employed, but just in the last couple of years. Sure. And many of them are just getting out of college, not at all thinking about buying a home.
Right. Okay, so there's a couple things that I'm hearing. One is a little bit more of maturity, as you know, as they grow older, and maybe a family, married, children. The other thing I'm also hearing is college. Certainly a amount of debt that's associated with that, and then compounded with the last decade of employment being, you know, stagnant, let's say. So that's quite a quadruple of events that really kind of hinders them, doesn't it? I mean, really, that was stacked against them, right?
Yeah, well, I don't remember having massive student loan debt or car payments or any of these things that kids have today. Debt is just something that they seem to think is normal. Yeah. Even though they watched their parents suffer from it during the recession, but it's not in housing, it's in a different place, so maybe they're not as worried about it, but they should be. Mainly because of their debt-to-income ratios, they won't be able to qualify for what would be a real asset, which would be a house. Instead, they can qualify for a car, and they can walk into a school that, you know, no one should afford, a $250,000 education, and get a loan for that with absolutely no way to pay that back. Right. But that's become normal. It certainly wasn't normal when I was their age.
Yeah, right, exactly. So, I mean, getting a loan for the car, I mean, certainly, you know, it puts off the time when they buy that house, but getting the loan, some of them have credit problems, so getting a loan for a car actually is going to help them on it. I mean, build their credit up. You're going to need that. Some of them don't have no credit at all.
Well, that's true. I will say, though, you know, I've interviewed a lot of millennials on my podcast, and my daughter included, they actually, some have very good credit. I see. And some lenders will actually look at the time you spend in college and use that as part of your experience and work, which is amazing. Yeah. So I've actually seen some millennials, don't tell anyone, of course we're live, so that some people are actually using their student loans to buy housing. But the biggest problem is they don't necessarily understand how to grow wealth. That is not something they're being taught. It probably wasn't something you or I were taught. We had to go learn it. So that is what's needed most. I helped my daughter choose between buying a new car and buying a house. I somehow was able to get her to buy the house.
Right.
And she did that last year. She has $100,000 equity now, and her $1,400 mortgage payment is less than what she paid in rent. Plus, rents have gone up, so she could rent that house out and get $2,000 a month.
Sure.
Much more than she's making. So she now understands the value of buying a real asset versus a depreciating one like a car.
Right. Well, you know, and I think the housing for most folks, a house is going to be their biggest investment, and in the end, with hopefully appreciation, they'll be able to take that to the bank when it's all said and done, right?
And over time, you know, we've learned, hopefully, that you can't rely on appreciation, right? I mean, we are at the top of the market.
Sure.
We don't know where it's headed from here.
Yeah.
I don't personally believe we'll see another housing crash just based on housing, because there are the loans that are out there are solid, they're good, people are locked into really low interest rates, as low as 2%.
Yeah.
They can't go out and buy a new home and, you know, get even near the payment they have today, and they have lots of equity because many people bought when prices were lower. So I don't think people are going to be walking away from their homes if prices don't continue to rise, you know.
Right.
So I'm not worried about that at all. But is it sustainable for this 8 to 10 to 12% price growth every year? Of course not. So that will slow down, and people just need to be aware of it when out there purchasing.
Well, water has its own level, and I think the housing market is going to come into that too, right? I think that's how it's going to play out. Certainly from the recovery, you're right, some of those appreciation digits are going to slow down, and then you think we get back to some type of normalcy? I don't know if we'll ever see another housing crash like we did back in 09, 08, 010, right, or 10, right? I'm not sure if we'll see that in our lifetime. Again, certainly was a shock for me because, you know, you and I were always used to, every year it goes up, we watch it go up a couple points, right? I don't know if we'll ever see that type of crash again. So, the bottom line is the appreciation in time will certainly settle out, won't it?
Well, it just depends on a lot of factors out of our control.
Yeah.
If we see runaway inflation with the Federal Reserve printing more and more money to maybe get us out of the next recession, then, you know, we'll see inflation, and that may affect housing as well.
Sure.
In an inflationary economy, you want to own assets like that.
Right.
When you're not owning assets like that, it gets harder and harder to get in.
Yeah.
So, you know, even with headline news saying, sales are slowing, I say, don't worry about that. Interest rates are low.
Yeah.
If you can lock in a low payment that's about what you pay in rent or less, do it. Because you know rents are going to go up, but you can lock in a fixed rate. And the same for investment property, which is what we help so many people do nationwide, is, hey, you can buy a property, rent it out, lock in that fixed rate, but you'll be charging higher rent every year, and that's how you build wealth.
So is that the way to go, is to pick up properties? There's still good buys out there that people can get a portfolio of properties together, buy them, rent them out. Is that the way to go, you suggest?
Absolutely, but it's getting harder in certain markets.
Yeah.
The really high price. I mean, you're not going to find a great cash flow deal in San Francisco or LA unless you do short-term rentals or something like that.
Sure.
But there are still probably 60% of the country where you can buy a property, get a mortgage on it. You could get up to 10 investor loans through conventional finance. It's easier almost to get a loan for a rental property than your primary in some cases because you get to count the rental income.
Sure.
So, there's a lot of markets where you can still make the numbers work. But please don't just jump in and buy something because you heard this interview. You've really got to treat it like a business, understand what you're doing.
Yeah, I was just going to say, you have to be really careful, don't you? Because you can buy wrong, just like you can buy wrong in anything as far as investment is concerned. So you have to make sure that you buy right. We're almost out of time, but are there tools out there that folks can utilize to leverage? Let's say they're interested in doing this, but they don't know where to go. What should they do, Kathy?
For sure. I mean, I'll shamelessly promote myself, but Retire Rich with Rentals is a book I wrote that's a really easy read, and you can decide then if you think it's for you. There's real estate investment groups in every city where you can talk to experienced investors and see what they're doing. There are so many resources. You can get a lot of those at our website as well and get referrals to different groups around the country.
Yeah, awesome. All right, so we're just about out of time again. What do you recommend for millennials in home ownership? What do you think they should do?
I would say forego the new car. Don't get a car loan. Try to save money, buy a car that will work. and instead save money for a down payment. You only need 3% to down on a home when it's your first home. So do that. And you don't have to live in it forever. You live in it for a period of time, and then you can rent it out. That's okay.
Save your money. Save, right? All right, we're out of time.
Yes.
All right, get a copy of Retire Rich with Rentals. Okay, Kathy Fettke's the author of that one. You're going to want to check that out. Kathy, where's your website?
RealWealthNetwork.com. Real as in real estate, wealth is in your money, and network as in the network we have nationwide to help you out.
Awesome. Head on over to today, RealWealthNetwork.com. Kathy, thanks for being with us here on Traders Nation. Appreciate it.
Thank you.
You bet. Have a great day. All right, we'll be right back. Stay tuned. All right, welcome back. You are tuned in to Traders Nation. Thanks again to Kathy Fettke. All right, head on over to our website today at realwealthnetwork.com. All right, Don. Hey, Don, where can we find you out there in the World Wide Web? You got to be somewhere,
okay, right? Hey, I'm over at LinkedIn. I'm at Facebook. I'm at, where am I? I'm at, what do I miss? Oh, Twitter. Don McKelvey at Twitter. Don McKelvey at Facebook. Yeah. I'm there.
All those great places. There. Yeah, check it out today. Get involved, folks. Participate, share, like, get all that stuff over at Don's place of social networking, and also, right, Don? And
That's right.
Hey, you know what? Guess what? Good news, folks. You can find me Facebook, Twitter, LinkedIn, all those great places. Kurt Chimmers, spelled just like that. All right. All right, Don. So, what do you want to shotgun out here? We got about 30 seconds or so. You want to shotgun something?
Well, look, Traders Nation is the place to be. I'd be remiss today if I just didn't mention briefly the pot stock Tilray, which is now down 37 points. Kurt, this stock traded over $300 a share yesterday.
Yeah.
It's down $125 from the high of yesterday.
Remember the old days, Don. What's the ticker on that one?
TLRY.
TLRY. Yeah, all right. A little marijuana stock there. Hey, Don, we should get a hemp list together. Okay, maybe we should do that.
I think you're right.
All right, Don, do you own anything we talked about here today?
No.
All right.
No, none of them.
Yeah, I don't either. Be careful about that TLRY. Fun to look at, but you know what? Look at it 10 feet away.
That's right.
All right. Hey, thanks for tuning in today, making us part of your day. Everyone have a great day. We'll see you on the next edition of Traders Nation.